Hello, I'm Angeline Ong, and welcome to this new edition of Beat the Street, the show that gives you all the tradable news ahead of the Wall Street Open. Coming up, a big US banks report. JPMorgan, Citi, Wells Fargo get the season into full gear. The early viewers, we're getting some healthy numbers. Jeremy Naylor will give us the details in just a moment. UnitedHealth also beats on the quarterly profit front in terms of lower medical costs. We'll have more on that in just a moment. And game changer, the UK gives Microsoft the green light to buy Activision Blizzard in the biggest ever tech deal. Good afternoon, a warm welcome to you wherever you're joining us from. Not long now before Wall Street starts trading, US stocks are slipping just marginally. A lot of caution out there as we count down. And of course, we have those bank earnings, which we'll get to in just a moment. But for now, the stocks seem to be slipping as investors are assessing those earnings from the big US banks. Treasury yields also easing after a spike in the last session. Just checking in on some breaking news for you as well. We've got some trade numbers in. Import prices expected 0.5% for September. We got negative, we actually got 0.1% rather. Expectation was for 0.5%. And export prices for the same month, 0.5%. We got 0.7%. Now, without much more ado, let's cross now to Jeremy Naylor, who's been looking through and digesting those earnings for us. Jerry, early thoughts?
Haven't we all week? And I guess really after the inflation data yesterday, this is going to be the main focus of attention going into the back end of the week. And as you said, Angie, it's really good in terms of the overall sweep because we've got the major banks reporting today, Wells Fargo, JPMorgan Chase and Citigroup all coming through with better than expected earnings and all helping the markets on the upside. As you said, there's some negativity swirling around the market as well, which I won't go into just at the moment. I know we're going to be talking about that in just a minute. Let's just quickly run through the numbers because I think they've all got the same theme here. And they're all benefiting from this rise in interest rates, giving them net interest margin increases, which have been really good. Let's take a look, first of all, at numbers from Wells Fargo. Now, Wells Fargo is not an international bank. It's known for its big exposure to the American economy, and it's been doing really, really well from higher rates. It increased the net margin, which helps profits. That rose 8% to $13.1 billion in the third quarter. You can see here, earnings per share, $1.48. We've been looking for $1.24. Revenues, 20.86. 20.1 was the expectations that we were looking for. So Wells Fargo beating on a number of different levels. Let's take a look at the share price chart. Which we can see where we're looking here at a gain at the start of today's session. We're up 2.5%, or sessions on the IG platform indicating that there is going to be a little bit of an uplift at the start of today's trade. If you're long going into this, you want your stop loss below the $40 level. 40.85 is where we are at the moment, but around about $39. I'd put your stop loss if you're long on this going into the start of today's trade. Net interest margins expected to be up 14% this year. Remember, I said it's up 8% in the third quarter. So it's still going to go higher still into the fourth quarter, and the stock looking pretty at the start of today's session. Let's move on to JPMorgan Chase. Now, this is one of the world's largest banks, and it's come through with its third quarter numbers. Earnings per share and revenues both beating as well. EPS $4.33. We've been looking for $3.94. Revenues coming in up 21% to $40.69 billion. We've been looking for an increase, but nothing like the sort of figures we saw today, 39.92. The company says the numbers include legal expenses of $665 million. Now that cost 22 cents. You can see when you look at the 433, that is pulled back by a margin of 22 cents because of the inclusion of legal expenses. But the company's saying higher net interest income than expected. Jamie Dimon says the bank is overexposed to earnings on net interest margin. And what he means by this is it means that there's not enough width given to other parts of the business. Too much money is being made in this one particular area. Now, JPMorgan Chase, let me just quickly show you the long-term picture here. This goes back to the end of the last century. And you can see here the way in this bank's moving. And it is by far and away the biggest bank. It is by far and away the best performer, and is by far and away the most consistent performer as well. The stock is up today. And in fact, I've drawn this line on here. It's a nominal line, but we are just peaking above that. The stock is up 1.25%, looking for a start above yesterday's cash close at 147.14. Same sort of performance for Wells Fargo. If you're long on this, you put your stop below recent price action with a view to taking it up at the start of today's session. Let's take a look at Citigroup very quickly, Angie. Before I get back to you, just want to quickly include this company. Very different sort of shape bank, but it has the international exposure like we have with JPMorgan. Solid growth in both institutional clients and consumer banking. Earnings per share $1.52. We've been looking for 124. Revenues just over $20.1 billion. We've been looking for 1931. I think if you look at all that we've got here, that we are looking here for a stronger start as well for Citigroup. If you just quickly dial in the shares, as I said, a very different looking bank. Look at the long-term picture here. Massive value destruction around the time of Chuck Prince and the exposure to a lot of those markets, which really sort of just emptied out in the great financial crisis. But let's focus in on what's happening today. Like all the other banks, we're on the way up, looking for a stronger start. We're up 2.25% at the moment. The company is splitting itself into 5 business lines. The chief executive, which came to the office, last year, I think it was March last year, Jane Fraser, she's also selling off some retail banking in some markets. Just recently done a deal in China where she's got rid of the wealth banking business in China. That was on the 9th of October. And the company benefiting from that, you can see this bounce off the recent line of support. But we're looking for a stronger start there as well for that. So it's banks on the way up. And that seems at the moment, Angie, to be the best sector performance going into the start of today's session in around about 50 minutes time.
Jerry, totally right there on the fact that Citi's got a more international presence. It's got a 34% jump in investment banking fees. Bright spot given several quarters of depressed deal making. Just want to check in with you too, because you had a really interesting S&P 500 technical trade going on earlier in the week. How's that progressing?
Yeah, thanks for pulling this up because, yeah, it has actually worked out quite nicely. And I guess, look, I lay my cards on the table. If it has not worked out, it was just as important we come back and explain why it didn't work out and how you get stopped out. Let me just quickly put this all together. We put this, this is the S&P 500. These are daily candles. And we overlaid this Fibonacci on here. And we were talking, I think it was it Tuesday? I think we first spoke about this. I was talking about this area of resistance up here between 43.94 and 44.40, which was the 61.8% and 76.4% retracement of this little move here from the highs we had back on the 14th of September, the swing low on the 4th of October, and this rebound here. And it is just that. It is just a retracement. The banking sector, as I said, is one of the interesting areas of the market at the moment. But look at the way it bounced back from the ceiling at 43.94 yesterday. Now, if you are short on this, your stop goes above this area up here, which is the 76.4%. So you'll stop at about 44.50, 44.50 is where your stop would be. We're currently trading at 43.56. So if you're short on this, expecting it to retrace down, then it's a line of support to watch out for is this rising red line, which is the 200-day moving average. So I think it has worked out nicely. But those stop losses, Andrew, are in place because just in case there is a problem and the markets swing back and it goes against you. If it goes against you, you don't want to incur enormous amounts of losses. So a stop loss will give you that protection as a way of insurance against a trade that doesn't work your way. But at the moment, at least, we have seen a pullback. And whilst banking stocks are doing well, looking down the list, it's tech stocks that seem to be the underperformers at the moment going into the start of today's session. That's it from me.
Thanks very much, Jerry. And speaking of tech and banking, I'd like to point out that AI will be talked a lot in the coming weeks, not only in the tech sector, but across almost every industry. Just picking up on Jerry there, banks, JPMorgan CEO Jamie Dimon recently stated that AI is already an integral part of the firm. Q3 earnings and further quarterly results may highlight the further impact of AI on the bank's bottom line. We've also got Microsoft, which is another all-session stock on the IG platform. I've got the chart up here for you. Microsoft and Alphabet's Google appear to be in the AI driver's seat. This is according to Wedbush. Also, Alphabet, another all-session stock there. Wedbush also saying that it views that lead players in the cloud service space as the key winners. They include Microsoft, Google, OpenAI, Meta, and Amazon. The brokerage expecting AI spending on the enterprise side to rise more in the next 3 to 5 years. Now, speaking of earnings, we've also got numbers out of UnitedHealth Group. Here's the chart for you. This is the daily chart, but let me show you the hourly chart because that's where all the action is happening, as you can see here. Its shares ticking higher on the hourly candle front. UnitedHealth beating the street earnings and sales forecast in the third quarter. This is thanks to lower than expected medical costs for the healthcare conglomerate. Adjusted profit coming in at $6.56 per share compared with analyst estimates of $6.32. Sales rose to $92.4 billion, roughly $1 billion higher than expected. Now, in July, UnitedHealth had told the markets it expected medical costs to be a little bit lower than in the third quarter. The company's medical loss ratio, the percentage of spend on claims compared to premiums collected, was 82% compared with analyst estimates of 82.8%. Now, over in the US, a bit later on, we've also got the Michigan Consumer Sentiment print that we're waiting for, because if we do get a fall, it would be the third straight month of falls. Investors also looking out for comments from Fed Bank of Philadelphia President Patrick Harker and Susan Collins. This is the Boston Fed Bank of Boston president a little later to find out a bit more about what they say about the strength of the economy. The US dollar is currently holding firm as that warmer than expected CPI and PPI number fuel prospects that the Fed may have to raise rates further. Well, Zane Vouda from Daily FX, part of IG Group, joins us now from South Africa. Zane, what are the technicals indicating for the dollar?
Hi, Angeline. Thank you for having me, obviously. Just taking a look, obviously, at the dollar, it's been a really intriguing week on that front. Now, obviously, earlier in the week, it did seem that the dollar might be in for a deeper retracement this week. We did have quite a bit of dovish comments out from Fed officials as well, largely around the impact of higher yields on what that would mean for the Fed moving forward. And I think a lot of the policymakers stated that higher yields could mean that the Fed don't have to do as much moving forward. And obviously, markets took that as a sign, as that we won't get another rate hike, obviously, in 2023. Now, obviously, yesterday's inflation kind of changed that. We did have a bit of an uptick in inflation on the month-on-month figures as well, beating expectations. And obviously, that stickiness we saw as well in headline inflation, the year-on-year figure maintaining at that 3.7%. Now, if we look at the chart, obviously, yesterday, we can see that we did have we had quite a massive bullish engulfing candle yesterday, which, it gave a little bit of a sign that we might see further appreciation in the dollar index for now. However, I think people might have jumped the gun, or market participants might have jumped the gun on that front. I still think that we could see a little bit of a deeper retracement in the dollar moving forward. I don't think we haven't seen much of a change in terms of the pricing for the Federal Reserve decisions moving forward for November and December, with still markets pricing. And I believe it's about a 45% chance of an increase in December. And that's not really changed even after the CPI print yesterday. Now, looking obviously, like I said, at the technicals, it is a bit messy at the moment. We did see a break of structure earlier in the week, that bullish trend which had been in play for quite a while. We did break down there, and then yesterday's bullish engulfing obviously now giving signs of potential continuation. But I think for now, though, as long as the 107 handle holds firm on the dollar index here, I do think we could be in for further downside next week. I think the only risk for further appreciation on the dollar, if we look at it from that perspective, could be what happens in the Middle East over the weekend and the early part of next week. If we do see any spillover from that, then obviously we could see further appreciation in the dollar index. But for now, I do think yesterday was kind of a once-off with that bullish engulfing candle, and I do think on the technical perspective, we could see further downside next week, potentially down to the 105 and 104.50 levels, hopefully in the week ahead. But yeah, I think that's what we're looking at next week.
Zane, thanks so much for the insight on the dollar. How about oil? We've seen a bit of stabilization in the price right now. What are the technicals telling us if we don't hear any sort of developments from the Middle East? Obviously, if there's an escalation, where do you think this the price could go?
On the oil side, Angeline, I think from the technicals at the moment, also it's looking bullish, like we could continue higher. But once again, I'm not going to say that we are definitely going to see that. The technicals, we are seeing quite a bullish engulfing candle today as well, kind of a morning star pattern we have seen here since we closed that gap over the weekend. Looking at it from here, I do think we could see slightly higher pricing, maybe towards the $87-$50 mark a barrel there before we do see some declines in oil here. Now, like you said, without taking into account the situation in the Middle East, that's how it's looking.
Lovely.
We're
Thank
going
you
to
very
see
much,
based on the
Zain.
supply dynamics and how that.
Thank you so much for joining us. We'll check in with you next week again. Very interesting technical charts there for the dollar and the oil. Now, just picking up on oil, the EIA yesterday confirmed the large rise in crude oil stocks announced by the API. Crude oil stocks rising by 10.2 million barrels last week. Gasoline and distillate inventories fell respectively by 1.3 and 1.8 million barrels. Oil prices settling, as we mentioned earlier. However, investors now awaiting the Baker Hughes rig count data, which is incoming in the coming week. And as you heard Zain say earlier on, it does also depend on what happens with the changing, fast developing situation in the Middle East. Now, gold is set to mark its best week in 7 months as markets price in potentially the end of Fed hikes. However, it's shifting sands when it comes to that front. Here to discuss where gold's headed from a technical viewpoint is IG's Chris Beecham.
Gold and silver prices have shown further strength in early trading this morning as a dash for some safe havens continues following the news in the Middle East. This comes despite a rise in US inflation yesterday and a slightly stronger US dollar, showing that there is maybe some short covering going on in gold institutional level, and that maybe we do have a bit more upside. Nonetheless, having taken big losses since July, they're still firmly in a downtrend, and just as they were probably stretched too far to the downside last week, it's a natural rebound. Whether it can sustain that in the longer term, given that the market now expects higher US interest rates by year end, is another matter entirely.
Thank you so much, Chris. Now, big story in the gaming and tech space. The UK Competition and Markets Authority has cleared Microsoft's acquisition of Activision Blizzard. For those of you who have been following the story as closely as I have, this has been a long-standing M&A saga that's been going on for 2 years. Originally announced in early 2022, the $69 billion acquisition was blocked by Britain's competition regulator, the CMA, expressing concerns that the US computing giant would have too much control of the cloud gaming market. But to resolve the issue, Activision agreed in August to sell its streaming rights to Ubisoft. As you all know, this is also a really big story, not just for Activision, but also for Microsoft, that's been trying to gain a foothold in the gaming streaming market. Now, according to the CMA statement, the new deal will stop Microsoft from locking up competition in cloud gaming as this market takes off, preserving competitive prices and services for UK cloud gaming customers. Both Microsoft and Activision welcoming the development and the CMA's most recent move to clear the acquisition, Microsoft's acquisitive buy of Activision Blizzard. This is how excited I am about this. The deadline for the deal to complete is the 18th. Now, it's been a long time and it's not over yet. Jim Ratcliffe appears to be ahead in the race to acquire Manchester United. This is another long-standing deal that we've been watching for you. The British entrepreneur is ahead of the other party, thought to be nearing an offer to take over the New York-listed club, Sheikh Jassim bin Hamad Al Thani. Both Radcliffe and Sheikh Jassim have submitted multiple bids for United since the club's owners, the Glazer family, announced they were seeking strategic alternatives. Now, the process has, it has to be said, gone quiet over the past few months, though after a deadline for final bids passed. Some reports suggest that Radcliffe could acquire an initial 25% of the club in a deal which would value United at around $6.1 billion. The sale of a minority stake is favoured by the Glazers, who would remain in charge in such a form of a deal. We'll be watching this space for you. Now, before we go, a last look at how the market is looking as we count down to the open. As I mentioned earlier, pretty muted looking start is expected. That's the hourly chart there for you. It is ticking ever so slightly higher now as we speak. However, just by a touch really after those overall early signs showing healthy earnings from the US banking sector. And that is it for this edition of Beat the Street, the show that follows the trading action, helping you to position yourself ahead of the opening bell. For more trading insight, do follow me on @AngelineOng, on @IGCom. Until then, this is IGTV.